You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 8th day of May, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a big purple button. You can't miss it. Click that, fill out the form. We'll get you indicators indicating. There's no credit card required, and you'll get 5 consecutive trading days on the trial, so the weekend does not count against you. It doesn't matter what hour of the day or day of the week you sign up for the trial. You always get 5 consecutive trading days, regardless of holidays or weekends. When the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, and this time scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. Some days you'll be busy and you can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we, as we're doing right now, simulcasting. But we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to watch them all. But it's a great resource to have at your fingertips, and it also lets you know we've been around for a minute. youtube.com/CFRN. This is our afternoon schedule, so we'll dive right in to our daily devotional. The topic we're on right now and through next week, after the cross. We did Easter, we did Holy Week, now after the cross. Today's scripture is John 16, verses 12 through 15, and I'll share it with you from the Message translation. I still have many things to tell you, but you can't handle them now. But when the friend comes, the Spirit of the truth, he will take you by the hand and guide you into all the truth there is. He won't draw attention to himself, but will make sense out of what is about to happen, and indeed, out of all that I have done and said. He will honor me. He will take from me and deliver it to you. Everything the Father has is also mine. That is why I've said, he takes from me and delivers to you. Again, that's John 16, verses 12 through 15. When the Holy Spirit comes to live inside of you, you have begun a tandem adventure. You aren't going through life solo anymore. What you see, he sees with you. What you experience, he experiences with you. And Jesus told us something incredibly interesting about this tandem adventure. The Holy Spirit speaks to us, but he doesn't speak on his own. He only speaks what he hears. Jesus said this, "It is from me that he will receive what he will make known to you. All that belongs to the Father is mine. That is why I said the Spirit will receive from me what he will make known to you." The Holy Spirit hears from heaven, from God the Father and Jesus himself, and speaks directly to us. It's a heavenly download. We're going through life with insights from heaven. Let's pray. Heavenly Father, thank you for sending the Holy Spirit to guide us into all truth. Help us to listen closely, follow faithfully, and glorify Jesus in all that we do. Reveal to us what we need in your perfect timing, and let our hearts remain open to your voice. It's in Jesus' name we believe and pray, and everybody said, amen. Amen, and happy Thursday. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 561 points, almost 1.5%. The Nasdaq's up 315 points, 1.75%. S&P 500 up 77, almost 1.5%. And the Russell 2000, our man in the streets, up 41 points. That's a little over 2%. This is super bullish. But be careful. There could be a bull trap lurking. In the commodity basket, crude oil up $1.89, trading $59.95 last. That's a gain of 3.25%, or $1,880 per contract traded. Gold down $57, trading $33.34 last. That's a drop of over 1.5%. Silver down 2 cents, trading $32.76 last. In the Asian markets at the close, the Nikkei posted a gain of 148 points. Shanghai rose 9. The Hang Seng gained 84. And in the European markets at the close, FTSE down 27. The DAX up 233. That's just over 1%. and the CAC up 67, almost 1%. So we had a green day in Asia. It was a mixed day for the UK, but so far it is a big green radio Thursday here in the US of A. Guess it's a turnaround Thursday. Okay, let's look at the news. A Navy fighter jet from the USS Harry S. Truman aircraft carrier fell into the Red Sea following a failed landing Tuesday. The FA-18 jet, valued at $67 million, was the second aircraft to fall from the carrier in 8 days. All crew were reported safe in both instances, with one crew member sustaining minor injuries. The Truman has been a key component in Operation Rough Rider, an air campaign ordered by President Donald Trump against Yemen's Houthi rebels in March in response to the Houthis' targeting of ships in the Red Sea and Gulf of Aden. The U.S. conducted more than 1,000 strikes, costing over $1 billion in munitions, before an Oman-brokered ceasefire this week. U.S. officials say Houthis did not strike either of the jets that fell into the sea. Separately, the Houthis pledged to continue tit-for-tat strikes with Israel, which they say was not included in the ceasefire deal. Estimates reveal an Israeli strike on Yemen's international airport in Sana'a this week, which caused about $500 million in damage, leaving the airport out of service. And as you know, the Fed held the benchmark interest rates steady yesterday for the third consecutive meeting at a range of 4.25% to 4.5%. The central bank gave no indication of plans to lower rates in the coming months, rebuffing a call from President Donald Trump to spur economic activity with rate cuts. I don't know if you watched this political theater yesterday, but it was deeply disturbing on a lot of different levels. Fed Chair Jerome Powell signaled uncertainty about the direction of the U.S. economy and the recent spate of tariffs. Powell seemed undecided on whether to prioritize tackling stubborn inflation with higher rates or to lower rates in anticipation of a predicted economic slowdown. Inflation is expected to reach 3% this year, above the bank's goal of 2%. The U.S. gross domestic product contracted by 0.3% last quarter. Now, if you watched this yesterday, Jerome said, the economy's pretty strong. Interest rates are almost at 2%. He said, everything looks real good, but I'm not going to do anything right now because I'm not sure what will happen in the future. Right there clearly shows you the difference between someone who possesses the skill and talent of leadership versus Jerome. Go figure. Hang on just a second. Okay, sorry about that. On to Wall Street. President Trump today announced a trade deal with the UK, the first for his administration since imposing, then pausing, sweeping reciprocal tariffs against all trading partners in early April. Trump said the breakthrough U.S.-UK trade agreement, which he called a great deal for both countries, would boost U.S. export markets for agricultural products, including beef and ethanol. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. President Trump made that statement from the Oval Office. But that's not all President Trump had to say yesterday. He resumed his attacks on the Federal Reserve Chairman Jerome Powell, calling the central bank or the boss a fool who doesn't have a clue. The comments on the social media platform Truth Social came actually today after the Fed yesterday kept interest rates unchanged, and Powell reiterated that he would wait for greater clarity on how Trump's tariffs would affect the economy before deciding on a path for monetary policy going forward. So if you're part of the middle class, I'm sorry. I don't know what to say. Trump has repeatedly called for the Fed to lower rates, which is the right thing. You don't heal a broken economy without lowering rates. He didn't repeat that demand Thursday, but he did resurface his contention that Powell has a history of moving too late on monetary policy. Too late Powell is a fool who doesn't have a clue. Other than that, I like him very much, the president said. The president in his post also argued that there is virtually no inflation, arguing that almost all costs are down while tariff money is pouring into the U.S. Traders have now pushed back bets on the first rate cut this year to July from June, and odds for a rate cut in July are just slightly better than 50%. Markets are currently pricing in 3/4 basis point rate cuts starting in July. It's unclear whether the Fed still anticipates making 2 cuts in 2025, as it predicted back in March. Thanks, Jerome, for leaving us in the Biden stranglehold. From Bloomberg, Trump officials have internally discussed potentially granting the United Arab Emirates, Saudi Arabia, it's easy for you to say, and Qatar a special fast-track status for deals, a move that could smooth the way for billions in investments, according to people familiar with the matter. The deliberations on reforming the Committee on Foreign Investment in the United States are in the early stages, said the people who requested anonymity, as the talks are private. Some people just can't keep their mouths shut. The measures would expedite large investments into the U.S. from key American allies, though officials could still decide against this. There we go with the glass half full, the glass half empty. I'll take a paper cup. Coinbase Global has reached an agreement to acquire crypto options platform Deribit for $2.9 billion, one of the most significant deals ever for the crypto industry. The deal marks another milestone for Coinbase, the largest cryptocurrency exchange in the U.S., after missing out for years on the wider transaction volumes and margins that other exchanges captured from derivatives trading. Coinbase stock rose over 4% on the announcement, and it's currently up a little over 5.5%. And last, Nvidia stock fluctuated today as the Trump administration said it plans to repeal AI chip export restrictions put into place under former President Biden. The AI chip-making giant stock had ended Wednesday's trading 3% higher after a Bloomberg report first indicated that a repeal of Biden's so-called AI diffusion rule was coming. The Commerce Department confirmed the regulatory shift after Wednesday's closing bell, saying Biden's AI rule was overly complex and overly bureaucratic. We will be replacing it with a much simpler rule that unleashes American innovation and ensures American AI dominance. Nvidia rival Advanced Micro Devices, AMD stock, also gained nearly 2% on Wednesday and rose an additional 4% early today, and it has now come off those highs considerably. Okay, let's do this thing. Oh, Bitcoin just broke 100,000. Huh. Well, how about that? Anyway, that's not what I wanted to tell you. Oh, hang on, I need to check something first. Give me just a second. See what it is. All right. Sorry for the interruption. Back to where I was headed. Here we go. This is it. All right. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis though, also crude, gold, silver. Over the last 353 weeks, we've issued over 19,500 individual handcrafted alerts. We're closing in on 19,600. What we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 7:30 a.m. Eastern. Since the markets opened Sunday night, this past Sunday night at 6 p.m. Eastern, we've issued a total of 53 individual alerts. Still waiting on the outcome of 15. It gave us 38 actionable alerts, of which 3 or 8% would have been stopped out. Again, based on market structure and a simple process we teach all of our passport holders. Now, yesterday we had 24 actionable alerts. Today we have 38. We were at 4% stopped out yesterday, and as of the recap this morning, we were at 8%. Some of these that are waiting have probably resolved themselves, and that will be reflected when Valerie updates the recap later this afternoon or early evening, probably right ahead of the members only workshop, which is at 8 p.m. Eastern. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then in most cases additional targets, and then a final trade to target. Yes, you can trade them, but the real purpose is to help you learn how to read a chart. If you're going to be a lawyer, you got to be able to read case law. If you're going to be a doctor, you got to be able to read the medical journals. If you're going to be a trader, you got to learn how to read a chart. It's a different language. No words, no sentences, no paragraphs, no punctuation. It's a whole different world. But you got to learn the language, how price flows. You should be able to look at any chart of any market, and with the help of our humble indicator set, instinctively know what the next high probability move is. You should be able to spot where potential resistance is, where potential support is, and that reveals the windows of opportunity that live in between those two very important points. So, we still got the rest of today and tomorrow. So we'll see how we finish up for the week. Again, over the last 353 weeks and 19,500 plus individual alerts, we've averaged 20% or less on a weekly basis. Now the logic alerts, they can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now 353 weeks, that's quite a long time. But long before there was a Logic 247, we had our original alert service, the concierge trade alerts. They're different. Number one, they don't come out around the clock. Last night, I got them posted 5 minutes ahead of the Globex Open. So we know today's the Thursday session, but it began last night at 6 p.m. Eastern. So all of our members and all of our trial members had all of these targets 5 minutes before the open. The S&P, the Dow, the Russell, crude, the NQ, gold, and silver. Now, if you missed yesterday's broadcast, I walked through each and every one of the Logic 247 alerts that have been issued so far this week. So if you missed that, by all means, you can go to youtube.com/CFRN and you can see them, each and every one. And maybe I'll run through them again tomorrow. So now we're looking at the daily chart of the S&P 500 Emini futures, the bellwether. This is the daily chart. Now we were looking for a retracement back to the BBC. When the step line crosses blue and climbing, price will typically retrace back to the BBC. And considering the stuff Jerome had to say yesterday, I'm really surprised to see this. Now we've got this high here was 57.24.75, and this one today is 57.35.50. Okay, so we've taken out that high by a little bit. The next major obstacle is right here at 57.73 and a quarter. Okay, so we had a downtrend, leg retracement, leg retracement, leg retracement. You'll notice that the pullback to the BBC holds more often than not. When price crosses below the green line, we expect lower prices. When price crosses above the green line, we expect higher prices. And when price pulls up to the BBC, the pullback holds more often than not. When price pulls down to the BBC, the pullback holds more often than not. But eventually price will trade through, as it did on this day, February 21st, and that began this downtrend. And the first sign that the downtrend could be ending was right here, when we failed to put in a lower low. So you can look at it two different ways right now. Leg retracement, leg retracement, leg retracement leg, which again failed to put in a lower low. So that means that trend may be coming to an end. And now you can look at it this way. Leg, retracement, leg, retracement, leg, retracement, and a leg. But again, this is all based off of that one deal struck with the UK. I think that's where this bullishness is coming from. So I'd be very careful on the long side. If we make it to this spot, this could put an end to the rally. So could this. I guess what I'm trying to say is this is potentially a bull trap. So be careful, okay? Until we get a retracement to the BBC and it holds, okay? I'll say it again. Until we get a retracement to the BBC and it holds, I'm not convinced that this rally is going to hold. For everyone with a 401k or some kind of retirement plan where you're invested in stocks, I certainly hope it continues to move higher. But we're still straddling that 62% reverse fib. It's a reverse fib because we're currently in a downtrend. But as I just explained, that may be about to change. Okay. Now the daily chart's important because institutional traders, the deep pockets that actually move price, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade before you start trading it on your smaller time frames. Number one, it gives you a free look over the shoulder of the deep pockets that move price. And it's pretty easy to see that since the session started last night, a whole lot of buying going on. Yeah. Also, when you spend those 2 minutes with the daily chart, you're able to identify major areas of resistance and support here, here, and that's a solid spot right there. You aren't able to see those on your smaller time frame. So get the big picture look and then work your way down to the smaller time frames. Now the logic alerts and the concierge trade alerts are all created on the 30-minute chart. Nothing magic about 30 minutes. It's just a time frame I chose years ago, and it's worked pretty well for me. The vertical line separates today, Thursday. Here's Wednesday. Back here's Tuesday. Yesterday's high came at a weekly zone. Resistance. When price rallies up to a weekly zone, we expect resistance until proven otherwise. And when price drops to a zone, we expect support until proven otherwise. Now, we spiked below. This was at 2 o'clock yesterday when the announcement came out. Okay? So we got a leg up and a leg down, leg up, and then a retracement. And then we closed pretty quiet. Now, this is the opening candle last night at 6 p.m. Eastern. And all of our members and trial members had these targets 5 minutes ahead of the open. So we open above the BBC. So we expect higher prices. And it took us right up to the long target and resistance at the weekly trading zone. We've published the zones for over 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So let's say you waited to this candle. Okay, it opened at, we'll call it 56.65, up to the target. That was a nice 10-point move, but it continued another 7 points up to the zone where it found resistance. Then we got a retracement to the step line. That pullback held. We got another leg and a retracement and a leg, and then we got a deeper retracement. And as you can see, price came right down. This zone that was resistance here and here and here suddenly became support right here. Bounced us up to the BBC, so the pullback held, and it sent us back down to the top of the short target. That gave us a little bounce, but ultimately we traded through it. Now this low right here, as you can see, the low of this candle right here. Okay. See that area? That's an area where you would expect potential support. We spiked it a little bit. But then buyers, they got happy. We're now back above the BBC. Red and falling has turned to blue and climbing. But these wicks sticking up are a little concerning because price just isn't sticking. I don't think we have anything in recent history that, see this high here, we took it out by a little bit. Okay, now this is Thursday, Wednesday, Tuesday, Monday, back over here is Friday. So we've taken out Friday's high. The question is can we stay above it? Okay, we got blue and climbing, and that's bullish. We're above the BBC, that's bullish. But the fact that we keep getting rejected up in this area, we'll have to wait and see what happens. Now, price is always trying to get to a weekly trading zone. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. That part's pretty simple. So as price inches its way up towards the high of the session, we'll see whether it is able to break through and make it to the next zone, or if we run into this same resistance. And then we would probably just get a retracement back to the BBC, and then potentially another leg to the upside. On the Dow, we opened right at the BBC. We moved up and then we retraced. This zone is 41,255/260. The next candle took us right up to the long target. This candle here opened at 271 and ran to 375. That's a $500 per contract candle right there. And as you can see, we hit that long target to the tick based off that high from yesterday. Then we overcame it, and when we trade through a long target, as we did right here, price will quite often retrace back to the long target, and it will act as support. And that's exactly what happened in this scenario. Support will send the market looking for resistance, which if you go look left far enough, you'll find it. Resistance sends us looking for support, which we ended up finding at this zone. Now again, resistance yesterday, resistance, resistance, resistance. Today becoming support. We've got a similar situation here where price has gotten rejected pretty soundly. I mean, we did put in a higher high, but we didn't close up there. Now, this candle, just like the ES, once it reaches this high, the question is, are we able to take it out? If so, then 41,900 to 41,950. That would be 50 points at $5 a point. That's what the YM pays. On the Russell, we opened right at a weekly trading zone last night, but we had blue and climbing below us. We got above the BBC and we ran right up to the long target. We continued to the zone resistance, which sent us back to the top of the long target, support. And we got a leg, and then we got a deeper retracement. Okay. See this low, this low. So you're always looking left to determine where you're going to potentially find support or resistance. And the market definitely found support here. And as you can see, we're now at the weekly zone 2044/45. And this is similar. We had two candles with wicks where price got rejected, but this candle overcame it. Sometimes the Russell will lead the other markets, at least for a while. But it's not something, it's not a trading strategy. Okay? Because the Russell doesn't always move first. So many people over the years have found the Holy Grail. When the Dow moves, I trade the NQ, or when the NQ moves, I trade the Dow, or vice versa. Some kind. There's no rhyme or reason. Okay. The best you can do is stay focused and trade what's in front of you. So we're up against resistance right now. At the zone, looks like we're going to try to punch through it. Then we have another zone up at 2064, and then the highest weekly zone is way up at 2140. Okay, so we had a nice run here. Just remember that there's the potential for it to be a head fake or a bull trap. We'll see. Okay, here's where we opened last night on the NQ. This candle right here. And where'd price go? Right up to the long target and the weekly zone. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. So it held as resistance for 2 hours. Then we got a leg and a shallow retracement and a leg and a deeper retracement that took us back down to the top of that long target. We spiked it just a little bit. And now there's those two wicks again. And here's the third candle trying to take out that high. Let's see if it did it on the ES yet. Oh, so close. Just be careful. How about the Dow? Okay, now the Dow's gotten above the two wicks, but there's still 15 minutes left in the life of this candle. So I would prudently wait for the opening of the next candle to take advantage. Okay. The Russell overcame. It's now right there. And the NQ, see, the NQ is having trouble breaking through that area. But with the other markets, all the markets in general, so bullish, it may punch through. If so, look for resistance overhead at 20,373/74. Crude oil. We opened last night below the BBC, but red and falling had gotten directly below price. When red and falling gets below price, it becomes potential support because it's probably on its way to becoming blue and climbing, which is bullish. And sure enough, price walked right up to the weekly trading zone. Did a little consolidating. Then we got a retracement right there. You see this area right here? That's this low right here. So we get a leg and a retracement and a leg. We hit the long target. And then we get a pull back to the BVC. Pull back holds more often than not. We didn't quite touch it. That's how bullish the market is right now, for whatever reason. So then we get a leg and a retracement. The zone holds as support. And then we get another leg, a retracement, and we're printing a green candle. The question will be, can it take out these highs? If so, then you look to this high as potential resistance right here. And then, of course, right here on gold. After an incredible two-day rally in gold, we're just getting a retracement. I mean, that's how price moves. You get this huge leg, you're definitely going to get a retracement. Okay, how deep does it go? Time will tell. We opened here last night. We printed a green candle. We got above red and falling. The step line, notice the black step line crossed red and falling. That tells us to expect a retracement back to the BBC. We traded through it. The pullback holds more often than not, but eventually it'll trade through like it did here. And then it retraced and the pullback held. And from there we made a run almost up to this high from yesterday, where the target is. And then we didn't have quite enough buying strength, so we backed up, got a running start, and made it through. Now, this particular spot, this was a very unusual candle here. I forget what happened on that day. So today the 8th. So today's Thursday, Wednesday, Tuesday. Anyway, whatever the reason. This is not a typical spot for price to find resistance. Remember, when you do your best work, your best analysis, what we've proven over the 353 weeks and 19,000 alerts is that when you do your best work, identifying what the next high probability move is, 20% of the time, or less, the market's going to actually do something other than the next high probability thing. So we reversed, got below the BBC, blue and climbing, turned to red and falling, took us all the way down. We sliced through the zone. Now, only three things happen when price encounters a weekly trading zone. 70% of the time, consolidation. 20% of the time, rejection. And 10% of the time, the slice. Now, when price on the 30-minute chart slices through a zone like it's not even there, when it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Buyers came in, we got a leg, a retracement, red and falling turned to blue and climbing. That took us all the way back up to the zone, and we consolidated there for a couple of hours. Now we've taken a pretty serious drop. But again, that's what you expect after a move like that. It's just how markets work. Now, the low of today you can track that back to this little area right here. That is market structure. So the market found support there, okay, for now. But we could easily take out that low, because if you look here, that's a huge window of opportunity. Hopefully you can understand. You see, there's, as you look left, once this low gets taken out, which is this low, you got to give it a little room, okay? But then you got this beautiful window from like 3304 down to 3298. That window's worth $600 per contract traded. And because we're below the BBC and we have red and falling, I think the potential for us to get down there, again, this low has to be taken out before we enter the window of opportunity. Silver. Here's the open last night. Got red and falling below on its way to becoming blue and climbing. And that took us right up to the long target, to the tick. This high from yesterday. That's that target right there. So we backed up, we hit it again, we managed to spike it a little bit. But the market said no higher. We rolled over, blue and climbing turned to red and falling, and it took us right down to the short target and the zone. The zone published Monday morning at 6:15 a.m. Eastern. Good support. Support sends us to resistance at the zone. Okay. Then we get a retracement to blue and climbing. That pullback held, and that sent us up through this bearish cross. Now that's unusual. We would typically find resistance at this area. And in the building of that candle, it's quite possible that it hit this area, backed up, hit it again, backed up, hit it again, and finally made its way through. But look at all these wicks sticking to the upside. Okay. Price is below the BBC. We're up against resistance times 2. The BBC and the weekly zone. So if price takes out this low right here, you got a nice window of opportunity here at about 32.52 down to 32.49. That's $150 per contract traded. Try to help you see it a little better. Got to take out those lows. And then you have this opportunity right here. And right here where red turned to blue, that's potential support. Okay, so that's a very conservative window. Now what if price breaks through the BBC? Now blue and climbing is directly overhead and the step line. That's potential resistance. That's potential resistance. Each one of these highs is potential resistance. But once you get up into this area here, you certainly have sufficient room to get your goal for the day. Something like 32.95 up to 32.97. That's very conservative, but it's enough to get your goal for the day. So Let's go back and check on the ES. It did it. It broke those 2 wicks to the upside. Now there's still 5 minutes left in the candle. So we'll see if we close at the high of the 30-minute candle or if we draw down in the next now 4 minutes. That's how much is left. And your next major resistance overhead is at the zone, of course, 57.52/53. The Dow broke to the upside. Russell broke to the upside. NQ breaking to the upside. Again, this candle hasn't closed, so you can't call it. Now, the zone is at 373. So from 353 to 73, that would be 20 points. At $20 a point, that would be $400 per contract traded. And that little area right there, 2353 to 2373. Okay, nice little window for you. Okay, that covers all the markets. Michael's going to give us a recap of what happened this morning in the live training room, and then do some live trading on the TradingView platform. And then I'll come back and wrap things up with our good word for the day.
All right.
I sent you a message, Michael. I wasn't sure what that was, but
Oh, okay. Well, I made a screenshot of it at the wrong point, but it's just it went in. I'll say that. There's something going in. All right. Can you see my screens? You can see my screens.
yeah, screens look good.
Okay, here we go. Good afternoon, everyone. Today is Thursday, the 8th day of May, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on the purple button, and it's going to bring you to this registration page. This page will be different tomorrow, but click on this registration page for now. And if you do this, you'll get in today and you'll get in next week as well if you do it now, today, tomorrow, and next week. Come down here, all we ask for is your name, email, phone number. Down at the bottom gives you TradingView login ID. Okay, hit register. When you hit register, you will be sent everything you need to get into the room in the morning and get your indicators indicating on your charts. Okay, so they look just like mine, hopefully. Now, we had a relatively slow day today. Not a lot of trades. Smallest number of trades so far this month. I did do a lot of talking again, so I guess that's probably part of it. But anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We're up 63 ticks on the NQ, minus 25 on the Russell, plus 40 on gold, and plus 32 on the ES. That put us at plus 990 on the morning session. Today it took 7 minutes and 4 trades to get to the goal for the day. At that point, we're at $1,000 a contract, which was a total of 16 trades. So on the month now, we're at $5,777. That is over 5 trading days, averaging $1,155 per contract per 2-hour trading day. On the year, we're at $125,595. That's over 77 trading days, averaging $1,631 per contract per 2-hour trading day on the year. Look at all those sevens. 77, 77, 77. Lucky. It's not really. But anyway, if you're following the 2420 blueprint and you're adding 1 contract per month, you should be at 5 contracts right now. Now, to be able to add 1 contract per month, you have to consistently achieve $2,000 per month per contract in profit. All right. So in January, I had to make $2,000. In February, I had to make $4,000. In March, I had to make 6. And in April, I had to make 7. And this month, I have to make, I'm sorry, not 6. I had to make 8, and now I have to make 10 this month. All right, quitting when I get the goal for the day. I have to make $10,000 this month. I think we're off to a pretty good start on that. If you look in here, you know, the ones that are 1,000 like that, mean I hit exactly my goal. So if I have, if I were to hit my goal exactly every day of the, every business day of the month, let's see. I am trying to see here. We have 1, 6, 11, 12, 13, 14, 15 more business days. So 15 more business days would be $1,500. Times 10 would be $15,000. So we're easily going to make it. If I just hit my goal every day for the rest of the month, we'll easily make it. If I just hit my goal for the day for the rest of the month, this number will be $18,450. So I'm not concerned about that at all. We'll be adding another contract at the end of the month, going into next month. All right, that was a lot of talk to just say where we are on the day. We didn't have a lot of trades today, so we'll have some stuff that we can talk about and go over. Look, I found a new tool today. I don't know what we can use it for, but it was a kind of neat looking thing. This guy down here. I gotta figure out how to use it. Oh, I think I got it. I got it now. If you click on it, hang on, not that one. This guy right here. If you click on it and you go to where the beginning and end is, oops, and then you stretch it out. There, that's how you do it. All right, that is pretty handy. Do you know why that's pretty handy? I'll show you in a little while. I'll have to figure it out. I'll try to figure it out myself first. But it'll be handy in figuring out the diamond principle. It might not be that I use though. The triangle might be better at figuring out the diamond principle. I think, yeah, that might be better at figuring out the diamond principle, because then you can just reverse that down to here, like that, and slide it over like that. Interesting. I'm going to work with that and see. But for right now, it doesn't matter. The trades that we took, let's get into that. Scroll back. This is gold. Wow, we had a big move there on gold. That happened. We had two big moves as we got into the European markets closing. We had this big move right here. If you look at it on a minute chart or a 30-minute chart, I bet this 30-minute chart, it's going to look like a huge candle when the European markets closed. Man, come on, get to the end. Yeah, these candles right here. When the European markets closed, it was that huge candle there, followed by another huge candle right there. I read something about something went across my phone about Trump or something like that. I don't know what the heck it was, but anyway, going back to the 9 range and what we did this morning. He spoke this morning. That's right, Chris. He did speak this morning. All right. So there was something that I did during the break that I didn't finish. Something I started and finish. I just remember to do that later. Okay, so we're going to go back to the beginning of the day here. All right, so on the gold, our first trade on gold, we picked up 10 ticks right here. The next trade on the gold, we picked up 19 ticks to get us to, looks like we picked up 10 ticks to get us to 20. And then the one after that, we picked up 9 ticks to get us to 29 right there. 9 ticks to get us to 29. Then we had another small trade, 2 ticks to get us to 30. We had a break even, another break even. And somewhere in here we had 9 ticks to get us up to 40. This might have been the 9 ticks to get us to 40. But we ended up with 40 ticks on the gold this morning. All right. Now the gold was doing pretty well as far as the movement went. The leg lengths were long enough so that most of the time you're going to be looking at conservative trades. This is what happened right toward the end of the morning session. This huge move down right here. All right. Now, could you have taken a trade out of that? Well, yeah, you could have. This is what I was looking for the pullback to on the initial move, but then that changed once it finally did pull back here. So you would have been looking at this right here. For those of you guys that have been watching that stuff, would have been a perfect spot for an entry right there. This one over here, not as good. This one right here would have been perfect. Okay. And went sideways through here and didn't give a whole lot more as far as entries go. I mean, you could have gone short right here. The down close of that bar would have worked out. Could have gone short at the down close of this bar. It would have worked out. Could have gone short at the down close of that bar. It would have worked out. Could have gone short at the down close of that bar. It would have gotten you break even. Then it flipped around and started going long. So right in here, this was like 100% retracement of this leg up right here. So right in here would have been a good spot. The stuff that I was talking about this morning, for those of you guys who are in here now, who were in here this morning, that's your bugle right there. Right? So this is the midpoint of the bugle that it should have pulled back to and bounced off of, which it did perfectly. Right in there. Okay, and let's see. Then you had this huge move down. There's some opportunity here on the short side. There was one here that wouldn't have worked out. One here that wouldn't have worked out. And then you had opportunity on the short side that would have worked fine there, fine there. And right here would have been a little more complicated. That would have stopped you out. It flipped around and it gave a trade right here. Now this was a good looking trade right here. That would have been a good looking trade. It would have been an aggressive, I mean, a conservative long trade. And I would have taken that and stopped out and been surprised because that was really a good looking trade. You see the entry point was right here. It was at a good spot. So that would have surprised me right there. We didn't have anything there. It pulled out of the overbought right here. That didn't go anywhere. A decent trade there and there and there. And that one would have been a mess because it would have put you in down here at the bottom of the gap. And then it would have stopped you out there and then just gone down after that. Anyway, the gold was really active. I'm not going to go through every trade because I could be doing this the whole session. But the gold was really active here. I'm not going to take that thing off there. I am going to go work with that though. What if I can create my own thing? That would be awesome if I could create my own thing. Anyway, that was it for the gold. We ended up with plus 40 on the gold. The Russell, we only had one trade and it was a stop out. Right, I was able to use it a little bit right here. I stopped out on the Russell. Now I feel like I probably should have my stop at break even on that. And it wasn't really a great trade to take. That was my first trade of the morning, and it wasn't really a great trade to take. The position of it wasn't the best. Okay, we had just gotten through this right here, right, where we had higher highs and lower lows. Okay, so the whole bugle thing again. There's your higher highs, and right here is your lower lows. Okay, the way it came together, so it should have been pulling back up. It should have been pulling back up into that area right there. I'm going to draw a regular line so you don't have my squiggly one. Actually, I'll use this, and that will draw a much better one. Sorry, where my squiggly line was, you see. And I shorted it right here. I shouldn't have shorted it there because I would have put my stop right there. And that's what I've been trying to tell you guys for the last few weeks. Pay attention to where your stop's going to be. Because right here, if I would have waited for a pullback on that, then I would have shorted it up here, or I would have skipped it altogether because it went 10 ticks into profit. But because where I entered my stop was right there at the 50% retracement level, and it stopped me out right there, and then it went down and did what it should have done. So that was kind of a mistake on my very first trade. But you guys see that, right? I've been trying to get this across, this point across to you for the last, well, since I've been drawing these things on there for you. So you understand, they don't actually do stop runs. It's just your positioning of your stop depends on what your risk management strategy is and where you enter the trade. I had a choice right here to get in on a pullback, which would have put my stop up here, or to get right in right there, which I did do. And I think I probably had even a worse fill than that. I got down here. And I probably had enough. They probably went 10 ticks in profit. I'd have gotten the right fill, 18.6 down to 17.4. It did go, it went 12 ticks into profit. If I'd have gotten a good fill and I'd been paying attention, it was right in the pre-market right there, 1 minute before the market opened. So I probably wasn't paying that close attention to it. And it stopped me out to the tick. Right. That was our only trade on the Russell. You can see at the end of the session, at the end of the morning session, the gold tanked and the equities started to run. Now on the ES, let's do this. Go all the way back here, control, arrow back. I'm looking down at the bottom. There we go, 930. Okay, bring it up to the top. So here on the ES, our first trade on the ES was a +8, and then this one right here is where we got the goal for the day. We got +2 on that to get us to 10. That was after the stop out on the Russell. We had a +10 on golds, a +8 on the ES, got us to 200, but we're -125 on the Russell at that time, so we're +75 altogether. And then I got two ticks there to get us up to 100 even, and that's where we got the goal for the day. We didn't trade again until over here. You can see the whole bugle thing happened again in here. Well, it wasn't actually a bugle because the bottoms didn't have lower lows right here. It's kind of a wedge. But when we break out the bottom of the wedge, it's bearish, and you can see it really did break out the bottom of the wedge quickly. Came right back though and did the whole bugle thing again right here. Lows to highs. But after the +2, after those two trades, we went from 10 to 22, so we had a +12 there. And then I stopped out on this one. That went me back down to 12. So from 22 down to 12, and then I got a 20 on that one. That got me up to 32. And that is where we ended it for the morning session. I think I ended my trading there for the morning session. I ended with 32 ticks, but I took one more break-even trade right there. That was it. You see the equities just took off when the European markets closed. Who knew? That was the ES today. Okay. Now, a new pope has been elected. Okay. It doesn't take long, it seemed like.
White smoke came out of the chimney.
Yep.
They had one vote yesterday. Black smoke came out, and so on. I guess their second vote.
Wow,
White smoke.
that was pretty quick. A lot of times it takes. Well, sometimes it takes a long time.
You know, of the 155 cardinals, I think it is, voting, 133 of them were made cardinals by Pope Francis. So it's
wow.
kind of like, you know, back in the Supreme Court, all liberals or all Democrats. Mm-hmm. So anyway, I think that's why it went. I think that's why it went so quickly and so easily.
Probably,
because they're looking for someone who's going to carry on, and quite frankly, the Catholic Church at large was not very happy with Pope Francis. He okayed some things that have long been not part of the Catholic faith. But anyway, back to you.
Okay, back to me. All right, on the NQ. Our first trade here, we got 4 ticks. Then our next trade over here was an aggressive long. We got 16 to put us at 20. Then our next trade over here was a short. We got 19 to get up to 39. And then our last trade was right in here and went from, that was 24 ticks, got us up to 63. And that was all that we did on the NQ this morning. Okay, and again, the NQ, all the indexes, all the equity indexes took off at the end of the morning session. Okay. All right, so now I can just get into trading, I guess. Let's, this is a good spot for a long trade right here. Or it was a good spot for a long trade a minute ago. It's not right now, but it was a minute ago. Where it came out right here. It gapped up a little bit. So, I can't even find my DOM. Everything is buried over here on my other monitor. Here it is. There we go. Now I can find my DOM, but it's too late. Now, the reason I said this is a pretty good place, if you're using this leg length and you were aggressive, you could have gotten long right here at the bottom, just about 100% retracement of that leg length. And if you're using this leg length, you could have, again, gotten long there aggressively at the bottom, at the open of that bar. Actually, it wouldn't be, no, could have gotten conservatively on the close of that bar anyway, but it pulled back to the 50% retracement level. Okay, that's what I was saying, that was a nice looking spot for a trade. And let's see, we have nothing there, nothing there. There. All right, so a down close on this bar right here on the gold would be a good spot. An up close, not so good. A down close would have been good. Let me explain that to you. This right here, a down close would have been an entry right here at the 50% retracement level. An up close puts you in right here and it puts your stop right here. So right now, an entry on the pullback of the up close is much more attractive to me. Okay, right here. Within that bar would have been better. If you would have gotten a pullback and an entry on within that bar would have been much more attractive to me. But let's look across over here. We are about ready to flip the YBR over here on the NQ. We already did on the ES, and look at the Russell. Oops, I'm gonna do this right here on the Russell. I only have one trade so far on the Russell. It's too late to take it right now. You would have been taking it right in here. All right, so I have nothing right now. Nothing. All right. We're above the YBR, otherwise this would be a great spot for a short right now on the gold. Okay. I'm gonna count this toward the totals. All right. Let's see. We now are putting in a higher swing, and we did 100% retracement there. That 100% retracement spot would have been a good place too. Now we have pretty much the same. Yeah, we have the same levels here. So this right here is a spot for an aggressive long on the gold. Right there. That was right there at the open of that bar. Was a spot for the aggressive long. I wasn't quite aggressive enough. I didn't get filled. I tried though. I put it on just a second too late. You guys see that? Do you understand the difference, right? The aggressive means when it goes into the oversold, that's when you take the trade. Conservative, when it comes out of the oversold, you take the trade. All right, this is not a good place for a conservative trade. Okay. So now we will be looking for this. This is really messy the way it is, the way it's come together right here. I want to go into the oversold and then have a deeper pullback, or go way down. Give us a leg length like this down here. Would be nice. All right, it's 120. We're just not getting a bunch of trades here right now. What I was asking for right here on the ES was this. One of those. Right there. That's what I was asking for. I put in my request. We'll see if they come through for me. Nope. I'm gonna have to file my grievance. All right. The union. So I'm looking for the pullback in here. Looking for a good spot to short it when it gets up into the overbought again. Okay. Just didn't happen. And up close on that bar right there would have been a pretty good spot if it would have done it, but it didn't. Look at this chop over here. This is even too tight to do even aggressively. The chop in there. Buy the open of that, sell the open of that, and it's too tight to even do aggressively in there. I mean, super aggressively. So we'll just wait a few minutes and see what comes up. It doesn't look like anything's going to come up, but we'll give it a few minutes anyway. Okay, this is a pretty good spot right here on the ES. Let me draw it for you. Okay. So right here, it went into the overbought on the ES. Excuse me. It's a pretty good spot to do an aggressive short right here. Okay, well, it was a pretty good spot to do an aggressive short a second ago. Here it is. Now, if it pulls back 100%, my stop is actually up here right now. If it pulls back 100%, but that's because I got in a little better. We'll see. It might stop me out. I have a 10-tick stop on this. Okay. Window always on top. And it got me. That's unfortunate. It's going to be to the tick too. Wait, you'll see. We're looking for the gold now. It broke out of that little bit of chop, and we're looking for that to hit the YBR and flip down. Get rid of the slingshot over here. All right. Well, it did not do that, and instead, it gave you a long opportunity when it came out of the oversold. I thought it was going to hit the YBR and flip down, but it didn't. Okay, so right now it's at like pretty much 100% retracement that last one. Now it's going to flip the YBR. Whether it closes up or down, it's going to flip the YBR right here. And now here on the ES, now that it's moved up that far, we have the bugle. So we'll look for that as a support level. Okay, and that's still pretty much right there. The NQ is, well, let's do this from here to here on the NQ. So the NQ's got, here, I'm throwing my stop at break even on that. Yeah, I'm going to lock in some profit on it at 10.5, and I'm going to lock in all the way down to 2.5, so that's 32 ticks right there. Okay, I shorted up here at the open of this bar right here. Okay, because it was right at the midpoint of that. And this right here on the ES is a great spot for it to go long, right? Now I know the NQ is going down, and this NQ, the ES is suggesting it's below the YBR, so you're not going to take a long trade, but it's suggesting it's probably going to go up from right here, the way that the bugle works. Okay, but it's below the YBR, so you're not interested in the long trade right now. Okay, let's just make that clear. And this is 32 ticks right here. So if it does fail right here, and if that does fail through, then that's okay. All right, so I'm out with 32 on the NQ, and the S is probably going to hold and push up. Now, if you didn't have the context on there, all right, and you were just going by the leg lengths, here's, well, I'll do that in the partners meeting. I'll go over to the partners meeting tonight. Things to consider in the partners meeting tonight. All right. Things to consider. All right. This down close right here, well, that was the trade that we just took a minute ago. But this down close right here, the optimal trade was the one that I took at the open right here. It was the aggressive short right there at the midpoint. That's got to get down into the oversold now. Hopefully put in a lower swing, some kind of leg length about this big right here. Would be optimal, would be great. That'd be what we're looking for. The YBR is going to flip over here on the golds, so you're not going to have anything there that you can do. All right, so this has changed over here now on the gold. You'd be looking for it to get back up to here. I'd short it if it got back up to here. Okay, now the way this is coming together on the gold, it looks like it's potentially coming together. Nope, it just fell apart. Oh, it's still potentially coming together pretty good. Okay, let me draw this for you. Okay. Nope, now it's stretching out. It's not as good now. It's not as good. It was a second ago. It was going to be you had the chance for an aggressive short at the midpoint, but as it turned out, you had the conservative short that you could have taken from right there, and now it's gone all the way down, all the way back up. And what I'd want to see right now is something from up here. Okay, you want to have a deeper pullback in a flat spot up here. That's what you want to see right now. All right. Oh man, we're out of time. Okay, well, let's see if we can get one more gold trade off. Want another up close right here. Another up close. And one more up close. One more up close. I'll short it on the up close. There it is. Okay, so I'm going to short it right here. Almost. If it goes down that far, I'm going to cancel it. Okay. Oops. Nope. It just filled me crap. I'm going to move my stop to break even. I don't have a stop on anymore. Hang on. Let me just flatten. Just take a little profit on that. I accidentally deleted all my orders. But what I was looking for, I was trying to sell it right here on the up close. All right, I was looking for a pullback on the up close, just a little bit deeper pullback on the up close. Now when I went to cancel it, I hit the wrong thing to cancel, and it filled me right there anyway. So I ended up taking a couple of ticks profit on it. But yes, James, you are welcome, and you are welcome too, Chris. I'm gonna wrap it up tonight. Remind me tonight, for those of you guys that are going to be there tonight, to look at the bugles, the trendless bugles. Okay, remind that. I'll write it down so I remember. Okay, put that in the partners meeting tonight. All right, so with that, let's go back here for just a minute. If you have not taken a free trial with us, that's on this page. Go here to the homepage at mytradinghu.com, click on the purple button, no credit card required for the trial. Fill out the registration form if you start today or tomorrow, and you try to get all next week too. Okay. And today we ended up with $990 a contract. On the month, we're at $5,777 a contract. On the year, we're at $125,595 a contract. Okay. I don't think we've ever had a year at $125,595 before we get to June. Anyway, let's wrap it up. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Okie doke. Recap of the morning session.
Today it took 7 minutes and 4 trades to get to $1,000.
Good job.
You are welcome.
All right, guys. We have covered all the markets. Here's one last look at the daily. And we had a high here at 24.75. High here at 41. So we've now taken out that high. So our next major obstacle is going to be at 73 and a quarter. Okay. Again, I think this could be a head fake. I think this could be a bull trap, but I've been wrong before. We'll see what happens by the end of the day, end of the week. Okay. This attempt at a retracement to the BVC, it didn't quite complete. So there's like an unfilled thing happening here. So that's why I say just be cautious on the long side. To become a member, go to mytradingiq.com. Watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. In the email, let us know you want to become a member. We'll send you an email that explains everything it means to become a passport holder, and we'll even give you a link to click so you can seal the deal and actually be in the members only workshop tonight. Okay, we can make it happen today, but you got to do your part. All right. Now, when you become a passport holder, you get 2 hours of live interactive training every trading day. Real trades, live markets, with commentary explaining every trade taken and the results. We don't sweep anything under the carpet. While you're trading along in your demo account to qualify to actually trade live, and asking every question that pops into your head and getting an answer. That's an interactive training environment. And 9 out of 10 new traders fail simply because they don't have anyone to teach them how to trade. Along with the group training, you get 2 hours. Along with the 2 hours of live training every day, you also get private one-on-one mentoring. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why it's so important that you learn how to read a chart so that you know where to expect potential resistance and where to expect potential support. And as we discussed earlier, 20% of the time the market is going to do something other than the next high probability thing. So save your time, save your treasure, chasing that holy grail where you're right 100% of the time. Because that's not going to happen. It's not going to happen for you and the best trader on the planet, whoever that might be. It doesn't happen for them. Getting stopped out is as much a part of trading as breathing is a part of life. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. As I just mentioned, you'll be able to attend the Members Only Workshop every Thursday night, 8 p.m. Eastern. And you get the golden key that opens all the private channels in Telegram. And one of those private channels is the Members Only Workshop channel. Once we finish the meeting tonight, it will be placed, the recording will be placed in that channel. It's probably a couple hundred Members Only Workshops in the channel. Do you need to watch them all? No. But you can scan through them, because Valerie typically, when she uploads the video to the Telegram channel, she'll put some commentary there about the major topics that we covered. So you can scroll through there and you might say, oh, I've been wondering about that. So you can choose to go watch that video or fast forward up to the part where we're talking about whatever it is you have a question on. But there's public channels in Telegram and private channels in Telegram. But once you become a passport holder, you've got access to everything. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. Setting prayer traps. 2 Corinthians 10:5. Take captive every thought to make it obedient to Christ. When we read the verse, take captive every thought to make it obedient to Christ, we tend to think it's about capturing sinful thoughts and getting them out of our minds. And it is, but it's also about capturing creative thoughts and keeping them in our minds. This scripture also means stewarding every word, every thought, every impression, and every revelation inspired by the Holy Spirit. A pastor writes, the Aramaic word for prayer means to set a trap. We often think of prayer as nothing more than words spoken to God. But maybe it's more than that. Prayer is also when God speaks to us through dreams and desires and promptings and impressions and ideas. Prayer is the mechanism whereby God ideas are conceived and captured. And it's our capacity for prayer that will ultimately determine our creative potential. One way to set prayer traps is by keeping a prayer journal. Journaling is one of the most overlooked and underappreciated spiritual disciplines in our multitasking culture. Your journal captures your journey. It shows you how far you have come and how far you still have to go. It reminds you of God's grace when you stumbled and His faithfulness that brought you back to the right road after you had taken the wrong one. When you set a prayer trap, you capture each experience and wring the wisdom out of it to become better and stronger. In Habakkuk 2:2, we're told to write down the vision. Some of us do this digitally, others with pen and paper. What matters is that you are recording what God is doing in your head, in your heart, and in your life. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.